Hey guys, welcome to another YouTube video. This is Prince Forex, and before I begin with today's topic, I want you guys to kindly subscribe to this channel, like this video, and then share the video to other people because I'm going to drop a gem here today. Right, so the main topic that I'm going to discuss about is market structure. Right, this is the foundation of which many people find it very difficult. And if you don't really understand market structure very well, your trading journey as an SMC, I'm an SMC trader, so I'm talking in terms of SMC trading, is going to be very difficult, right? So what is market structure in the first place? Market structure is basically the flow of the market, right? It determines or it shows how market move or price move, right? So that is the definition for market structure. So before you can even make a decision, before you can even predict price, before you can mark out possible zones, you need to understand market structure in the first place. Because if you don't understand market structure, you can't make the right decisions as an SMC trader. So, market structure is, like I said from the definition, is the flow of the market, right? How do we identify market structure in the market? That is what we are about to talk about. And I believe this video is going to help a lot of beginners, intermediate, and also even those who are pro traders. Some don't really know how to mark out their structures very well. This video is going to help them all. So kindly subscribe, like, and then comment. All right. So before I begin, I would like to give you three scenarios. So we have three movements or three forms in which the market moves, right? So that will bring me to the types of market structure. So types market structure. Right. So I am very much aware that most of you have heard of these types, right? Because it is not anything new. It is something that most of us learned when we started our trading journey, right? So these are the three types. We have what we call the uptrend. The second one is the downtrend. And then the third one is the consolidation market, right? The uptrend is also known as the bullish market structure. And then the downtrend is also known as the bearish market structure. And also the consolidation market structure is also known as the accumulation market structure. So what do we mean by a bullish or an uptrend? For bullish markets, it is characterized by higher highs and then higher lows. What is a higher high and what is a higher low? Let's consider this particular leg here. This V-shaped here, right? So this particular apex is what we call a high. Right? So that is a high over here. So that is a high. The apex is a high, right? So if this is a high, and we said for all uptrends, for uptrends or bullish structures, so bullish or uptrend, they they have these characteristics: higher highs and higher lows, right? So these are the characteristics for uptrend. And what do we mean by higher highs and what do we mean by higher lows, right? So this particular high here is a high, right? Let's consider this as our previous high. right? Before we can get a higher high, before we can get a higher low, price needs to move upwards. So if price move all the way upwards and create another V shaped like this. So if price creates another V shaped, this particular high here is no more a high, but it is called a higher high. Yes. Why do we call this a higher high? Because this particular high here is higher than this high. This high here is higher than this high. That is why we call it a higher high. And once price creates this low here, right? So initially, this was our low. Initially, this was our low here, right? This was our low here, right? So once price, so it's also a V-shaped, right? Once price creates another low, right? Once price creates another low, this low here is higher than this low. It's not lower than it, it's higher than it. So this low here will be called a higher low, right? Right. And as you can see, there is another higher high being formed, and price will create another higher high, right? This won't be called a higher high. It is a higher high, same as this one, right? So this low here will also be called a higher low, just like that. So this is how the bullish market structure is. It forms a higher low, and then it forms a higher high, just like that. And it continues like that. Let me give you guys some chart examples here. I need a very clean example. All right. When you look at from this particular zone, from here all the way to the upside, you could see that price was moving to the upside, which means it was in an uptrend, right? So price was creating higher high. So this particular one here is a higher high. Then price created a low here, higher low. Price created a higher high. And then price came all the way down here to create a higher low. Price went all the way up, higher high, higher low, higher higher low. And it came all the way up here, higher high, higher low, and it created this higher high. So that is how the uptrend market sometimes moves. Let me give you more examples for you to understand whatever I'm saying. All right. So looking at um let's give you, yes, this is a clear example here. So this particular move, price was in an uptrend. So this was what price was doing. Price gave me higher high, higher low, higher high, higher low here, higher high, because this high is higher than this. This one here was higher than this. So a higher high, higher low, higher high, and then price came all the way down here, right? And then gave me another higher high. So it continues like that. You can find a whole lot of them in your chart, right? So that is for uptrend. It is similar for downtrend as well. It is similar for downtrend as well. So for downtrend, it is characterized by what we called a lower highs and then lower lows. Lower highs and then lower low. So let's consider this move here. Right. This is a low over here. Right. And then this is high. coming. I'll just explain everything to you later. So these are V-shaped, and always the lows are V-shaped and the highs are A-shaped. So this is a high over there. All right, so let's consider this. So for downtrend or downtrend or bearish, right? For bearish market structure, it is characterized by lower highs and lows. What do I mean by lower highs and then lower lows? For every downtrend, price creates something like this. So this particular high here shouldn't be higher than this, since the characteristic says that the next high should be a lower high, which means this next high here should be lower than this particular high here, right? So price will create a lower high here. And then after creating that lower high over there, so this is a V-shaped, which is a low, but that low is now called a lower low. And then this is a high, and it is now called a lower high. Let me explain the main reason why I said lower highs and lower lows. You can see this V-shaped here, which is a low. It is lower than this low here. It is not higher than this low. It is lower than it. That is why we call it a lower low. And then mm, this particular high here is also lower than this high. It is not higher than this high. It is lower than this high. That is why we call this a lower high. So the next A-shaped and V-shaped formed. So this one here will be my next lower high. And then this will be my next lower low. Right. So that is it for a bearish market. Let me see if I can get some examples, a chart for you guys. All right. So if you can see from this particular move here, you can see from this down move over here, price was creating, this is a lower high. Sorry, let's say this is our high. This is a A-shaped over here. Price formed a V-shaped. So there was a V-shaped over here already. Right. If you want to see it clear, let me use the line chart. Right. So this is a V-shaped over here. That was our lower, sorry, our low. And then this was our high. Right. So once price gave me this low here, this low here won't be called a low anymore. It will be a lower low. And then this particular high here is now called a lower high, since it is lower than this high, right? So price came all the way down, right? And then went up again, down, up again, lower highs, lower lows, just like that. Right? Okay. So just like that, it came, price was just creating lower highs and lower lows. Like that. So these are very clear examples of, you can find a lot of them on your chart as well. All right. So let me move on to the next market structure, which is the consolidation market or the accumulation market. So the accumulation market is basically the market structure type that does not have any clear direction. It is neither moving to the upside nor moving to the downside. It is either moving from one support to resistance. So let's consider this as our support. I believe most of you know what a support and resistance means. So this is basically a support level. So for consolidation market, price moves from support to resistance, then from resistance to support, from support to resistance, then resistance to support, from support to resistance, then resistance to support, from support to resistance. The move can be something like this, then come all the way down to the support. So it has no clear direction. It is neither moving to the upside nor the downside, right? And most of the times, these are accumulation. That's why we call it accumulation market. The there is a lot of liquidity being invested above and below these particular zones. So we don't normally trade these markets. We only trade trending markets, which is the uptrend and the downtrend. So as a beginner, you just have to stay away from this market unless you actually understand how to trade these markets very well. Because it's very dangerous to be taking trades within this ranging market. So that is another name for it. It's either consolidation, ranging, or accumulation market. So let's see if we can find more examples on it. If I use my rectangle tool, you can see this is an example of a ranging market here. Price was moving from up, down, no clear direction. You can find a lot of them here. This is a ranging market over here. And as you can see from this particular move here, price was ranging, right? From one resistance to support, resistance to support, resistance to support. There was no clear direction over there, right? So that is an example. This is also an example here. This particular move is an example of a ranging market. So it's not all the time that it will be straight for you. It can be slanted as well. So this is liquidity here. And always after every ranging market, price expands either to the upside or to the downside. Right. So you can find a whole lot of them in your chart. This is also another example. Yeah. Right. And a whole lot of them. This is a ranging market here. Market was just moving from support to resistance, resistance to support, and all that. So you can spot a whole lot of them on your chart, right? So that is it for today's video. In my next video, I'm going to show you guys how to mark out break of structures, how to mark out change of characters or market structure shift, how to mark out all that, and the rules in picking all those markings. There are rules to that. You can't just mark out any break of structure or any market structure shift. So if you really want to understand smart money concept, this is the best channel for you. Subscribe and then share the link with others. Like this video if you like it, and then comment. Thank you.